Hi there. It's April 9th, and we're going to do an update on the markets, in particular the S&P. And we wanted to keep it in line with the big picture, because the big picture is not changed since we've talked. Actually, it hasn't changed in the last 2 months since we've been describing the market. We're in a bear market camp. We believe that the Dow Jones, the S&P, the various equity markets are at the beginning stages of what amounts to a very large 3-year potentially, or even a longer bear market than that. We've got some pretty good evidence that history is repeating, and we found examples all the way back to 1900 of this 3-year pattern where the market starts down and then continues for 2 more years. This is the most recent pattern that we could use, which is familiar, and it goes back to the year 2000, where a 3-year bear market did begin. It ended in March of 2003 with the second Gulf War beginning. What we have here is another important week. There's a good chance that the correction that began last week, or actually began on March 30th, will continue this week, and there is a pretty good chance that something unusual will happen, in that we could see a pretty severe, at least one very, very big down day this week. And the purpose of that down day probably will be to shake out all the bulls who have been starting to get happy again after the March 15th low. I think the pattern that best explains it, we found last time, was in the year 2000, and it was exactly 22 years ago. And it has one of the 2 or 3 higher correlation market patterns to the present market that we have found. And it indicates that there should be a continuation of the downside movement this week. And what's interesting is the 14th of April in the year 2000 was a massive decline day. And it might be this week that the 14th of April, Thursday, would repeat that. But it could be earlier in the week that there is something remarkably large on the downside that comes up out of the blue. I don't know the reason for it. But we found another pattern, which is in 1988, January 7 of 1988, which there's a very strong correlation to the present market. It goes back, again, about 12 months. It's one of the higher correlation patterns. And it also has a very severe decline this week. So when you see a couple of them repeating the same idea that, market's going to fall apart for a few days, it might be something to take note of and be aware of. And also, if you're long, you might want to hedge your positions this week. And if you're interested in speculating, you might want to go short to take advantage of the possibility of a more extreme event. The other interesting things that are happening actually are related to the astrological configurations that are happening. Just a couple of days ago, we had Mars and Saturn conjunct, and they were both at about 28 degrees of Capricorn, which in itself happens every 2 years, and generally speaking, it's either at or near a low point for the market. But this year, there's another configuration that's happening, and it's happening on the 11th, on Monday, which is highly unusual. It happens every 11.4 years, and that is that there's a 90-degree angle between Rahu and Saturn and Ketu and Saturn. And that combination seems to, historically we've checked it, it seems to be related to important high and low points in the market. I believe it was 17 out of 22 occurrences that we found that pattern in the last 100 years were major high or low points. So what's going to happen this year? Well, if you look back in the year 2000, this week is a nice down week and such, but then the market starts to go sideways, tries to rally, and it ends up having something of a rally over the summer this year, and maybe starting in the middle of July until Labor Day. But the high that it makes in September isn't any higher than the high that it made on March 30th a few days ago. So it could just be some sort of a sideways market which has a lot of gyrations up and down but actually goes nowhere. If that is the case, that could facilitate the idea that this April point, this March 30th high, could possibly be the next high that holds for 3 more years. The market could actually not take that price out that it made a few weeks ago, that it made last week, for a number of years. It would retest it potentially in September and possibly again in February of 2023. But if the astrology is starting to show, the possibility is that we could see a trading range market where this area, this 4,600 area on the S&P, 4620, 4630 area in the S&P, may be as high as it gets going forward. And once the lows break, when we get below 4,000 on the S&P, there's a good chance we'll see significantly lower prices. Now this time, there is a chance, because some of our momentum tools are saying that this decline that happens, if it is similar to the year 2000, the S&P futures actually made a slightly lower low than February 24th equivalent, which means we could have a humongo down day that takes out all of the stops for the people who were long the S&P, and they got long in February, or they got long on March 15th, just to make sure that they're not happy and that they could be potentially leaving the game just before it's about to get fun and have a little bit of a rally. But in the meanwhile, whether that happens or not, we still would be concerned that the market might be very bearish this week, and you'd like to take precautions to handle that. Now, remembering our last talk, we had, the basic idea was after the 14th of April, you could go long. And that's still probably true. However, the rally that we're expecting isn't necessarily going to be heating up until after a period of consolidation in April and May and June, possibly all the way until July. We could see kind of a trading range type market. But if there is a significant decline into the end of this week, on the 14th or 15th, then there's a very good chance that that's a place to go long. And you'll make some money going long if indeed the market repeats the 2000 market and also the 1988 market and also the 1929 pattern, which has a dip here, and then it starts to go back up for a few months. But the main point is that we're looking at the possibilities of a continuation of this kind of thinking that the market started up March 15th. It's going to do a retest middle of April, and then it's going to start up and probably work its way higher until Labor Day. But the next few months, however, may be a little bit boring. We talked about our 1-week automated S&P trading system, which we've back-tested all the way back to the beginning of the S&Ps, and it's been extremely accurate this year. And we are still presently in a long trade that will end this week, early this week. Right at the moment, it's about break even. It hasn't made any profit yet because the market was weak on Thursday. It came back up on Thursday and Friday a little bit. But that 6th trade that we talked about, we've had 4 out of 5 winners, and the 6th trade is presently kind of a break even. In any event, you might want to consider looking at it on our website, which is tradesthefuture.com. And we're also going to be putting out a quarterly report starting this week, which will include general macro market trends, which would be similar to what we've done in the past, but it'll be kind of picking and choosing markets that are interesting at the moment. We'll put gold in there, Bitcoin in there, the VIX in there, possibly the grains, which have been making outstanding moves on the upside, and whatever else is kind of on the front burner in the markets. All right, on that note, have a good trading week, and look forward to seeing what happens this week and seeing if the intensity of this Rahu square Saturn situation actually translates into what it has in the past. All right, thanks a lot.